Well, hello again, everyone, and welcome to the Options Mentor. Well, here we are the week before, actually the Sunday before the week starts, with the CPI and PPI coming out this week. The CPI on Wednesday, the PPI on Thursday. Both of these can be market movers, although I think the last time, if I'm not mistaken, the CPI wasn't as much of one, but you always have to be prepared. Those are both inflation numbers. The Fed has a meeting later on this month, and I'm sure the market will be looking to see what they think those numbers mean, whatever they are, hot, cold, indifferent, and what they think that the Fed may think of them. So we could have some movement around this week. So I want to show you a trade that can handle movement. And the interesting thing about it is we're in very low Vega time. Let me share my screen here. And now you can see, just a second here. Let me get my sheet. There it is. Share screen. There we go. A little technical difficulty. Anyway, the SPX kind of been range bound. I wanted to show you the VIX here. So the VIX is really down here pretty low, if I can get the right symbol, and struggling here today on a Sunday. But so we're at really at a low in the VIX. And I'm going to show you a trade that's actually short Vega. You may think that's a little weird, but the reason is butterflies aren't affected quite as much by volatility, not anywhere near as much by volatility, actually, as a calendar or a diagonal or a double diagonal or any long Vega trade. So what I want to do here with this fly that I'm going to show you is I want it to be something that we can really stay out of trouble with, even with a bigger movement. We shouldn't have, big concerns. Sure, you could take some losses if a move was huge, but it would be fairly minimal in the scheme of things. And this is a butterfly. Now, this is 32 days out, or 33, whatever. And it's the 13th of October. And what I did is I put it right around the money with the center. Using Friday's close, we had 44.57. So I just used 44.55. And then I went up 60 to 45.15 and down 70 to 43.85. By the way, you could do something like this in SPY also if you want a less expensive alternative, one that you can kind of, with your contract size, dial up. And of course, if you don't fully understand the trade, if it's not right for you, please just do it on paper. This is for education. So you have to look at that way. You have to know what your risk tolerance is, what your situation is. I'm just showing ideas that a person could utilize if they choose to use options. So in this case, this butterfly, what I like about it is very flat. This daily line shows you this purple, lavender, whatever color it is to you line, shows what you would be up or down for whatever day we're showing. So you can see it's very, very flat, which is what I like about it. And we don't have to do anything unless we go down about 60 to 4,400. Then you would just adjust on the downside, adding a complex. Or you could take it all the way to 45.09. So really, we got 50 points up, 60 points down roughly before we ever have to do a thing. Let's look at that expected move and what they're expecting here in this week coming up. You can see that here on the TD Ameritrade or whatever it is, Charles Schwab Thinkorswim platform. You can see here. And if we just look, to this coming Friday, expecting about a $60 move. So throughout the week, it'd be less. Right here it is, plus or minus for each day of the week. Now, that's the market maker expected move. They may or may not be right. It could be bigger, could be smaller, but that's what they're thinking by price action, what they think a move on the larger end of things might be, up or down. So really, this trade puts us in pretty good shape for this week, given the fact that, hey, it's no secret the CPI and PPI are coming out. We're not the only ones that know it. So the market knows that. And still we have a range that's basically to the edges of our fly, and during a lot of the week, maybe even not even there. And so we have a chance of getting through this. And maybe even by the end of the week, I've seen these types of things happen. If you could maybe even get a small vol drop, like I said, it doesn't help or hurt flies that much, but it can help a little. You might even be able to get out of this by the end of the week at 8 or 10%. And as a matter of fact, I would think you could get out of this trade if we don't have a lot of trouble in having to adjust it in probably anywhere from 5 to 10 days. You should be able to get out of here at anywhere from a 7 to 10, maybe even 12% profit. So that's what I'm looking at this week. The volatility in the market is very low. It's interesting to me that the market isn't really thinking about the fact that the CPI and PPI are coming. They must feel like that's not a concern, because with the VIX low, that means they're not buying puts, they're not selling calls, they're not showing any fear of the market dropping. So with that, you have to wonder what they're thinking. But you always wonder, do they know something I don't? Well, let's hope not. But I'll tell you what, the fly is a good trade, I think, for this week, just because you can handle movement with it. It's not extremely susceptible to volatility. If you put on a calendar a double long diagonal, it may very well work this week. But if for some reason volatility comes out, that will not be good. But there's a lot of different trades you can do. I just kind of really like this one and wanted to share it with you for the week. As always, please subscribe to my channel. Get the alerts so you know when my videos are coming out. Tell your friends about it. Ask questions, comments here in the videos. I do get back to those. I appreciate all the support and comments that I've gotten. Have a great week trading, and I will talk with you.